This is Tim Phillips, Chief Investment Officer at Phillips & Company Advisors. I'd like to thank you for taking your time to review our Q4 2021 China A-share look ahead. Please read all the disclosures carefully. With all that's transpired with China in Q3, especially the headlines, I'd like to take this opportunity to reset on why we invest in China. While it's hard to imagine after a very volatile last quarter, China still represents some compelling opportunities if you have an appreciation for their systems. First, their governance is dominated by a small group of Communist Party members, some 95 million, of which there are really only probably 6 million active in their government. They largely determine the outcomes for the over 1.4 billion people. Stability is paramount to the party and the country. Deriving equitable growth and fostering social harmony should be how we view their governance framework. That's the paradigm we really operate in. The opportunity is with the largest growing middle class on the planet. 72% of their population is forecast to be in the middle class by 2030. They will have historic purchasing power, driving growth and profits for corporations and investors that can invest wisely. Further, it's really hard to imagine the second largest stock market in the world and the second largest economy in the world without having exposure in that marketplace. Certainly, we expect the major passive indexes to continue to add domestic Chinese companies to their holdings in years to come. These are the high-level thoughts on why we continue to stay committed to investing a reasonable portion of portfolios in China's domestic stock market. Q3 was a period of time that regulatory reform took center stage. Again, from the governance perspective, the areas that took the brunt were areas that were gaining monopolistic powers or eroding the social harmony of the country. Things like video games, after-school education becoming unattainably expensive, consumer platforms using pricing power, and their monopolies were all threats to the emerging middle class. China's had a long history of pivoting between tight policies and more hands-off. And we're in a current episode of tight policy, which we expect to abate in the coming year. Much of that headline risk was absorbed by global investors in US-listed China stocks, as well as domestic Chinese investors. Looking ahead, we see a series of events that could signal better regulatory policies ahead and help us focus our attention on key areas to invest. Common prosperity and dual circulation are the language used by the CCP to express their desire to drive more citizens into that emerging middle class. Better healthcare, cheaper educational access, environmental policies that foster more sustainability, using technology to improve lives and protect consumers. Also, narrowing the wealth gap are all part of the common prosperity theme. And you can see the details of their plan on this page. Now, notwithstanding those goals, China did experience a similar but much smaller outbreak of Delta variant that hurt confidence and retail sales in Q3. We do expect those to dramatically improve in Q4 and continue to see China focus on dual circulation and common prosperity in the coming year. China is in the middle of their economic soft patch as they reemerge from their COVID outbreaks, floods, supply chain, and energy issues. We expect a slight downshift in GDP growth, yet earnings growth continues to be more robust than that of the United States or developed markets. With better valuations, we expect investors to focus on China as an opportunity versus a threat. The Phase 1 U.S.-China trade deal will conclude this year, and it's our expectation we'll see a relaxation of tariffs as the U.S. government now realizes we need better supply chain from China and lower costs to our consumers. You can read our views and recommendations here, but our general theme is that we expect regulatory reform to moderate in Q4 and in 2022. We also expect the US-China strategic competition rhetoric to moderate as well. We believe US policymakers will learn how to coexist with another world power. You can also see on the next page our list of holdings which we believe take advantage of this emerging middle class population and should drive positive outcomes in the years to come. I'd like to thank you for taking your time and attention to get an update on our views of Q4 2021. Of course, if you have any questions, please email me at the link below or connect with your advisor.